ONCHAIN CA H. ONCHAIN CA H.
Hello, here Aniceto. Welcome to another episode of ONCHAIN CA H by the Frax Force. This is a hard week for many. I see the charts like everybody, but don't worry, we are here to see what's going on during this week. I am not here alone. I'm here with Mr. Captain. How are you doing today?
Frax GM. I'm good. Besides the market conditions, I'm doing good. Yeah, it's weird times we are living in. So yeah, let's start.
Yeah, weird times. So let's see what's going on. So much things to this week. And yes, let's get started. We have a few changes in our episode today. We will divide it by sections. So let's get started in the first one. Let's get started. Yes, is the first section is about metrics. Like always, we review some metrics at the beginning. So let's watch first in DeFi Llama. Everybody knows DeFi Llama here. And let's review about the important things. Here is about the different blockchains. It's very clear that Ethereum is the dominating blockchain where most of the money is in. You can see in this circle, 52% of all economy is inside the Ethereum blockchain. That is not only a show of security of the blockchain, but also trust. It's a decentralized blockchain. And yes, this is a very specific metric that shows how people still believe that Ethereum is the blockchain to make financial transactions and deposit their money in.
I have a question. Do you think it looks the same or slightly the same in 5 years?
Interesting question. I think so. Like that also, there is the different question that investors, like institutions, will ask here is, okay, what is the more secure? This is the first question.
Is it? Is it important that it needs to be secure when it's a stablecoin which is backed by treasuries and Genius compliant?
True. I mean, they can make like this. Well, we see already with Canton and different blockchains that are coming up today. So they can make like this bank blockchain with them running their nodes. Even if it's not decentralized, they can run these games with, I guess, it can be some blockchain with real world assets where everything needs to be centralized and under authorizations by the legal entities and whatever. But it still will be some things that you cannot do there, like the whole DeFi permissionless systems that we know already. They cannot run under this blockchain. So if we believe there is still a space for this kind of decentralized protocols where you don't need to pass any KYC, you just need to open a wallet, I believe if we talk about open system where you don't need permission to participate, Ethereum will remain the leader here. And yeah, it's possible, it's totally possible that these big institutions, they create some blockchains that don't have the properties of Ethereum, but they transact through this blockchain. That's how I see it. And regarding the size of Ethereum compared with the rest, is just totally another level. Like Binance Smart Chain is 5.1 billion, and Ethereum is 37 billion.
Yeah.
Solana under 5 billion. Yeah.
Okay, last question. Do you think the share from the current second and third majority of the stablecoin holder chains, like BNB and right? Do you think it will just divide it further in smaller pieces? For example, Tempo Chain. I just opened DeFi Llama, and since 15 April, there was 3 million, basically 3 million TVL, and now we count 11 million. So it's not much, but we need to check the flows, I think, for this answer. Does it come from the main chain, from Ethereum?
I believe it will be some specific use cases for each blockchain. Like, okay, if I don't know, maybe there is a specific blockchain that, because their technological properties or whatever, it's gonna be the blockchain best use case for gaming, or I don't know, any other use cases. But as the interoperability right now is getting better and better between all of them, I believe that capital will tend to concentrate in the, I don't know, usually the top 5, something like this. It's not like only one winner can have all the liquidity or something like that. But yeah, I believe it's something like 5 most used blockchains, or maybe 3, I don't know.
Yeah, maybe you're right. I think of these as so the main liquidity hub, and from there we see it divided through different use cases, as you mentioned. But interesting just to have to hear a take. I have basically two takes on it. One is ETH is the winner and the distribution hub, and the second is probably we will see way more stablecoins, and ETH is the loser. But I have currently no thesis for both scenarios. It could happen both. That's what I want to say. So.
One question here, Captain. Do you know what is this provenance? I just watched it here in position number 7 with a lot of growth. So I don't know nothing about it. There's only two protocols into it.
It's a chain, right? Oh my! The chain was 1.5 billion. That's something for the FUD section, maybe. Let's see, provenance. Let's add it to the next week.
Yeah, imagine like you and me, we never heard about this blockchain. I just watch it here in position number 7 over Hyperliquid or Arbitrum Polygon, and we don't know what is this. So very suspicious, at least.
Maybe that's the real estate TVL we saw in the City article. It's exactly 1.5 billion. It's exactly this is the number. But yeah,
I don't know.
Let's check it. It's pretty cool. It's pretty weird. But yeah, let's check for the next week.
Yes, so let's continue with more metrics. As you know, if you are not blind, market is struggling right now. Not only, especially crypto markets. Here in this tweet, we talk about US stock market also crashing in the last hours, but especially the crypto market is getting knocked down. Ethereum, everything at least. And yes, sentiment. You remember metric for last week, the fear and greed index also moving the needle to the extreme fear. Bitcoin under 60K right now. So yeah, everything started to look very bad. People panicking. Even in the rainbow chart, Bitcoin went off the chart. We need more colors. We went down the rainbow. So yeah, it's usual business in crypto. Well,
No, I
sentiment.
think it's not usual. I think we're coming to this moment where I think, look, 2023 and 4, it was this meme craze. And basically the year before that, everyone was like, the next bull run starts in 12 months. Then it was 11 months and 6 months. And basically this self-fulfilling prophecy came true, but not in the altcoin section when it comes to stablecoins, DeFi and so on, Curve or CVX, Frax, Aave. No one of them experienced a real bull run, but meme coins. And I think this is a reaction because it was a reaction because the whole CT and everyone pretty much wanted to make it run it back to turbo, making the mistakes they made not happen. And we saw the grifter year of the years during this time, and basically wrecked the honest market participants and builders during that time. I remember a lot of builders, devs, and humble participants here, content creators, left the space or just ignored CT for a long period of time because of this period. So now we face pure adoption, only good news every day, basically 2 or 3 good news every day about RWAs, stablecoins, DeFi integrations, and banks joining our space and so on. I think it's this purge I expected way before the current times, maybe a year ago or 2 years ago. And it was everything predictable. If you think about it, the last 5 to 6 years, everything was basically predictable in crypto. And now we need something to break everything. So every prediction gets crushed and we have a new battleground to operate on. And I think that's the time we are in. And I'm happy for it, to be honest, because this is the only chance we have. Revenue token, utility token, value accrue token have a real chance to catch a bit after everything got destroyed. So it's not usual, I think.
Yes, this is another, not usual, but we pass already for hard times like this, where
that's true.
Our backs are down so bad.
True.
And
True.
At the end, we have some hope. So let's jump into this chart as well. Like, it's very long time. Here we are comparing others versus Bitcoin, and it's breaking after 5 years of very action that Bitcoin dominance was getting bigger and bigger. And we see here this wedge pattern, and we are breaking it. I don't know what that means, but it looks pretty much like a bottoming formation for me, this chart. And is very correlated with the Bitcoin dominance as well. So the rest of the crypto, usually called altcoins, are getting a bit more strength compared to Bitcoin in the last month, let's say. And we are breaking this structure here.
Makes just sense. Makes just sense because everything beside BTC is getting adopted and is catching some sort of narrative, even though it's not shown in the price yet. It's clear from the storytelling. It's starting to make sense, and hopefully we catch a bit later on and form it or create a narrative, and this narrative is moving the needle. So maybe the start of something great.
Yeah, and it's very correlated with this other chart that pretty much many people know is the Bitcoin dominance. So we are after a period where Bitcoin dominance was in a big uptrend, and now we are in a lateral period right now. and what happens in the previous bull market in the alt season and crazy mania 2021 was a violent downtrend in the Bitcoin dominance happening. So this is what we people call alt season. I don't know if we are going to see something similar, but the pattern the pattern
I
seems to be.
cannot talk about alt season yet, but yeah, I get it. The chart is pretty scary for a BTC hodler, to be honest. BTC is on the ground, on the fucking floor, or maybe not there yet, but pretty much down a lot. And now, imagine now our altcoins catching a bit. So nice.
Yeah, it's totally possible that this will repeat again. Some kind of others kind of crypto. I don't think it will be all the cryptos. As you mentioned already, there is a chance here to be some specific crypto projects with real revenue and they are making money, they are getting users. That kind of projects, I would like them to sign and make this multiple. So yeah, let's go to the next metric that is related with this. Is Patrick Scott talking about 20 protocols that have revenue to the token holders. And yeah, that's how this revenue was growing through the year, and the different kind of protocols that they have already this revenue flowing to the token holders and the different mechanisms here. And I don't know, Captain, talk me a little bit about these different mechanisms that we see different ones here: buyback and burn, dividend, only buyback, last hold. And so explain me about this kind of mechanism that give value to the tokens in the different DeFi protocols, and how do you see it? Do you think this is needed? At what kind of protocols this can benefit the holders, or what are your thoughts about it?
I'm not a fan of buybacks. I expressed my opinion about it a lot of times. I think there is maybe two scenarios. One scenario, I absolutely think it's a cool feature and maybe also needed. Let me explain that. For stablecoin companies who are operating in under the Genius Act, doing deals with banks and customers, white label tokens, white label stablecoins, so the whole TradFi package. And with needed marketing, incentivization, and basically spending money on stuff you need to be competitive. And I think basically stablecoins are fitting this section, Genius Act stablecoins, and also it depends on the business case or the business vision of a DEX, and also on a perp DEX. So second, when does it make maybe sense to make buybacks and don't burn the money you can spend on marketing and growth and incentives? A pure decentralized protocol, completely censorship resistant, and running on its own, like you can't stop it. It's just there. You can't replace it. Nobody can stop it. And it has a token. Nobody has control over it. And it has a built-in buyback mechanism and is embedded in the infrastructure of really important protocols. For example, a fitting protocol, in my opinion, could be FX protocol, not with everything they are doing, but with some mechanics they are doing. So yeah, I'm bullish on, I mean, it's, first of all, it's cool and it's needed that a token alignment is there. Buybacks are bullish. For me, it's cool, better than nothing. But if you ask me to compare these both, like distributing revenue to your hodlers or buybacks, I take distributing to your hodlers.
Yeah, like more like dividend share with the
like
with
dividend,
them.
yeah, like dividend. It's a dividend, like yeah. True. Call it
Yeah,
dividend.
I think there is a few projects here missing, like Aerodrome. I don't see it here, but should be in this category as well.
Yeah, absolutely. I think a lot of are
Also,
missing. Yeah.
pure convex, all these tokens as well should be in here.
Yeah. I mean, convex is literally it's a revenue token in the meaning. I mean, but it's nice to see metrics like that. It just means that our I mean, 6 years ago nobody talked about revenue, or 5 years, 4 years. Who talked about revenue? It was, what's the vision and how big is it? So how big could the growth be? And now we are real, we are matured. Now we're talking revenue. Yeah, like this metric.
Yeah,
it's nice.
Real business should have revenue. It should be sustainable, not only rely on printing of new tokens and getting distributed in some form of liquidity mining or other kind of, I don't know, imaginative way to pump or boost the APRs or PBL of the project. But this is interesting. This chart is showing that on-chain revenue, real yield. Many people call it. It was some narratives coming about real yield generated by the protocol getting used. This metric is bullish because this revenue keeps growing on chain. So that's what means for me is like, okay, real business are getting built on the blockchains, and they are getting more and more usage and more revenue, real money getting built with this. And the last metric we are going to show today, I know, Captain, you are not a fan of this, is about tokenization and different categories we have in tokenization. In number one, we have stablecoins. But yeah, is some of these metrics, this is just the TVL, the total value inside these categories, but many of them are still, I don't know, in very early stage. We know tokenization is one of the buzzy words of this year. And yeah, everybody's talking about we are going to tokenize that, tokenize this other. So far, these are the different categories that with biggest amount of money on it, but that can change very quickly. Any thoughts about these categories, Captain?
Yes. I think CurveUSD lost a lot of millions in the last 7 days. FrxUSD lost several millions in the last days. And a lot of other stablecoins lost several millions, which are in the 100 millions in the last weeks and days. Seeing up only numbers always from these services makes me think which chains they are talking about, first of all. And second, I think we will feel it when the numbers are rising. Basically, the on-chain volume is decreasing every week, or maybe today not because of the volatility. But we are not in a state where we can talk about rising volume, rising fees. Overall, yes, okay, but the protocols are suffering, and even Aave would be probably in the billions with V4 already. But it takes time. So yeah, cool metric.
So where do you think the stablecoins are going? Because if they are going out, that means people are going back to fiat, or they are just purchasing.
Yes, I think it's risk off. I think it was risk off because of AI threat, to be honest. Makes sense. That 10% probably is just risk off, just doing risk off things because of DeFi protocols. Basically, I saw a lot of CT comments about, if you are still in DeFi protocols, blah, blah, blah. And I think it's de-risking, and Probably also in Curve's case, maybe the packkeeper pools of certain protocols got hit hard because of reasons I don't know. But it's I think it's temporary. It's to be honest, it's temporary. But yeah, I think probably a couple of months we are in the state. We need some weeks without these hard bugs and hacks and and breaches. Then regain trust again, I think.
Yeah, totally agree. There's many stuff going on, and we see that in our one of our sections. We will see every week. We just keep releasing some of this news that some security problems through different protocols. So these are the metrics for this week, and we will jump into the next section. So bear with us. Let's jump into different news of the week related with stablecoins, but not only that, also DeFi protocols, institutions getting involved in crypto, everything. We have started today with MoneyGram. It's a well-known player from traditional finance doing, I don't know, their business used to be sending money from one country to another, remittances, all this stuff. And they are building right now one stablecoin. The name is MGUSD. And yeah, they are getting very deep into stablecoins, running on Stellar. Interesting, their choice for the blockchain. So yeah, we see more and more of this news getting a white label solution probably with M0. And yeah, they will use, of course, their own stablecoin with the distribution. The clients, they are already know this brand and they are using it. They have many physical places where people go to send money. So for sure, they will use all the branding they have on all the base of customers to get the usage of the stablecoin in the back.
Bullish.
It's
good news.
In general. So yeah, let's get to the next news. This is about MoonPay getting involved in the agents economy. So there is a cool video here. Let me play it and later we can comment into it. So yeah, very cool video. Any thoughts about this, Captain? I know you are not a big fan of AI in general, but in my opinion, these agents are here. They are already touching wallets, touching stablecoins. Of course, this is not the final form. I don't know how it will look like, but there is many people already talking that in the coming years, most of the transaction, most of the volume in the blockchain will be by agents. So yeah, this is a new product from MoonPay. We mentioned MoonPay several weeks ago, like they are doing a lot of acquisitions, different companies, and now they are getting involved in this agents economy. Any thoughts about how do you see these agents playing a role in the blockchains?
Yeah, we build blockchains for agents, not for humans. So we will see probably one out of maybe 10 more, maybe 5% real transactions and 95% agent transactions. When, I don't know, but in the future. But this agent here from MoonPay, I don't know, it just adds risk. Are you too lazy to type in $50 buying a cryptocurrency or what? So, you know, no, it's just adding a layer of potential security issues. I don't know. An agent is not safe, you know, it's still experimental to add this agent to I mean, you have to connect your credit card in this case, or a bank account or something. And in some case, I think it's connected. And for me, it looks like a marketing move, probably. And for me, agents make sense. And I think there's a huge wake up moment currently. So where does it make sense to implement agents? I think some really smart people are figuring out it makes the most sense is automation. And yeah, and the rest, let's figure it out. I think it's just a security, some unnecessary risk. So can't hear you because you are muted.
Sorry, so many buttons. I mute myself. But yeah, I agree. We are still too early. It can be some safety concerns about giving money to the agent. These are not deterministic. Like if even they can make this mistake, they make hallucinations and all this stuff. So still in very experimental phase. But I totally see how the future is gonna play out, and it's possible as well. Like the agent, before doing a specific action involving money, they need to verify what are they doing. So like a verification with zero knowledge or something like this. I don't know. Many smart people are working on it, and now these giga brains, they have LLMs to talk and to to play. So
I think
know.
it will be normal to use in the future. But people like me are a little bit too skeptic about the whole giving up control. And I think for some OGs here who entered the space because of control and freedom, and yeah, you have control about your life, finance, and everything. I think it's hard, maybe a bit more difficult to give up and give everything access, or give access to everything to these agents to do normal stuff and maybe save 2 minutes or so, whatever. But yeah, as I said, as an employee, so to say, for a dev, let's say about this, if you are a dev and you have, for example, 5 or 6 simultaneously working agents on stuff, you can audit afterwards pretty easy, but it just takes the time to create the code, and he just saves the time. I think that's something worth to explore. Setting up like 5 agents and for example reviewing or auditing your code while you create it. So I think there is a game changer. Really smart people will find things where they have a huge edge against everyone else. So I think these agents just accelerate the skills from these people.
Yeah, and also, I don't know, they will develop trading strategies, arbitration of difference of prices between different blockchains. So for sure, there are many things that make sense, that there are not humans doing that. I think since many years ago already, there is many stuff that there are bots. These bots are now going to be agents that they have specific strategies or whatever, and you can own the strategy of the agent. And I don't know what else coming. True. But yeah, for sure it's going to be exciting. Let's jump into the next one. Revolut apparently is partnered here with Pendle, a well-known DeFi protocol. is now live in Revolut, the fintech that is in Europe. So one of the biggest fintechs in Europe getting integrated DeFi protocols into it. That seems like pretty bullish to me.
Absolutely.
This
Agree.
is one of the news that came this week. But yeah, Revolut is pretty much throwing news after news with more crypto integrations, more crypto adoption. So that's what we need for people getting involved. Is they put them in their screen they are using every day, and getting, even if this is not like the real crypto philosophy where you are using this in a custody way or whatever. I don't know. This is just one easy way for them to get started, and I think this is positive in general.
Yeah, giving up with cyberpunk thesis is not really a problem because you have the opportunity to choose cyberpunk still, and this is basically way better than the last 30 years without crypto or the opportunity. So what's the problem when 90% is not KYC? That sucks, but TradFi aligned, or the rails for TradFi. And I mean, look, our money from the crypto native people it's just a glimpse what TradFi is. So it just makes sense if you want to join their old money, or you want to join the old money joins. Yeah, you get diluted basically, and I think it just makes sense to make some promise, make some give up when it comes to this OG thinking. And yeah, I cheer every announcement when it comes to this stuff. It helps reaching new people. So
And even, I don't know, Pendle is quite a complex project. Even people in crypto, they struggle to understand how it works exactly.
agree.
So yeah, I don't know. We need to find the best ways to sell the product to the normies, let's say. And in here, stablecoins, I think, is the total winner in crypto. Like, you don't need to explain what is a dollar, or maybe if you offer them like a yield on top of the currency they are using every day, they will pretty much understand it. Okay, they don't want to get the pegs or stuff like that for sure. This is why there is many legislations getting passed right now. But I think the first products for normies they can use is stablecoin related products. And I don't know, this is exciting, of course, for all the stablecoin projects. Here, another new, we have, it says the first of many. The Financial Conduct Authority of UK is, I don't know, getting attention for Hyperliquid.
Yeah, let me add some thoughts if you want.
Yes, go ahead.
Yeah, it was basically my add to the news. I'm not a Hyperliquid fodder or something. I love the story behind it, the lore with Jeff and the people who got rich. It reminds me a bit of Bored Ape Yacht Club. You see all these crazy, weird people getting rich because they minted early and believed in the vision of these founders, Gordon and the other one, forgot his name. So long time ago, I interacted with these accounts, but it reminds me basically exactly like this. You have this crowd of believers, and they got rich pretty early, and now they riding the wave with their founder Jeff. So yeah, it's a cool story. So I give them that, but I think it's not FUD to say it's not a pure decentralized protocol. It is executed by a bunch of people. It's not like a broad off governance and it's not handed over to the people. I think that's not even possible with a perp DEX who wants to be the fastest when it comes to deploying new markets or expanding their markets. So for me, it's basically, I saw a post, the current valuation makes sense, maybe, yes, because of the buybacks and the usage, but there's a huge, for me, there's a huge question mark. What is Hyperliquid? Do they want to be offshore? Do they want to be onshore? Will they become some sort of Binance US, like Hyperliquid US, with a US UI interface, KYC, and everything? Then everything gets diluted, and then the question is, what is Hype then? There's a security question then as well for the asset itself. When you do buybacks and stuff like that. So for me, it's this is just a start. It's just FUD from this guy. He's angry about Hyperliquid and stuff. I think some people know he's a Solana guy and was not amused about the Hyperliquid purchasing from his fund. But I think he's not that wrong. I think there comes more of this to the surface, and Hyperliquid needs to decide one day what's the choice. And to be honest, it would be really bullish if they stay offshore and trying to be the good guy when it comes to the slightly centralized exchange, the better player for the people. It's not my opinion. Many people don't like Binance, but if you can choose between Hyperliquid and Binance, it would be great, for example. So, and Hyperliquid is more DeFi native, more crypto native. So, but for the investment thesis or what they are doing and narrative and everything, I think we need to wait. I think the team knows what they are doing, to be honest. They have a good track record currently and over the last months. So let's see. But I think it's uncertain currently. For me, it's uncertain what will happen.
Yeah, I totally get it. Like, okay, we can think about they are DeFi, but when they are getting success, there is many noise, like people using this protocol in your country. Okay, they will get some governments getting involved, like this case. I don't know. Let's see, because so far you can access Hyperliquid through a wallet. You don't need to pass any KYC or nothing.
If this stays like that, I think if this stays like that, it's bullish. But if they choose to fully bow down, or to the US, why not choosing then Kalshi or something like that? With a greater user base.
Yeah, totally agree. And so far, the price is behaving according to their buybacks. There are a lot of usage, there are a lot of volume they are generating. So yeah, let's see how it evolves. Let's go into the next news. Babylon is a restaking protocol in Bitcoin. So they basically have the Bitcoin generating some yield tonight, and they are passing a proposal into Aave before to get integrated into it. So yeah, what it means is you can deposit your Bitcoin as collateral and borrow without giving up your custody and the wrapping. Babylon pretty much is one of the biggest Bitcoin DeFi protocols out there. And yeah, that's a good integration for Aave.
Is it Aave Ethereum? Aave on the Ethereum, or is it another chain?
Yes, Aave before so far is
it's
on Ethereum.
It's only Ethereum. Yeah.
Yes.
Nice. Yeah, it's good for the father of all meme coins, I guess. Like, I never believed in Bitcoin DeFi. Never. I thought it just plain stupid to add this security risk on top of something we need for, I don't know, attracting old money and growing in market capitalization. So for me, it just makes sense to wrap BTC basically and put it on Ethereum to work with. So yeah, it's cool.
Yes, so I think there is one more news for this week. We have here Stani, founder of Aave, and then he's telling us that what he's watching out there is every time he's talking to banks or these players, they all have a department of digital assets been working on it. So yeah, I think this is pretty much bullish for DeFi in general, that many of the banks already have full teams working with this kind of digital assets, DeFi protocols, and all this. So yeah, very good.
Agree. Nice. Yeah, I believe him.
Yes, so that's are the news for this week. Let's jump into another section. And yes, we are going to your favorite section, Captain, about fear and uncertainty and doubts, different things that happens during the week. And we need to evaluate many going on in this week about, I don't know, let's get started and get our hands dirty here, because we see MicroStrategy selling some Bitcoins. Our Michael Saylor, the savior that never gonna be selling Bitcoin, start to make a small sell of Bitcoin, and looks like a whole reaction of the market through this. So maybe you can comment of what's going on in this part.
Yes. It doesn't matter if it's 1 BTC, 2 BTC, or 30, or even only 500. The narrative, he broke the narrative, he broke a promise. So that's why people are struggling. Look, I have no information what's going on behind the scenes and who is friends with Michael Saylor when it comes to the whole vision of MicroStrategy. For example, if the biggest boys on earth baking him and everything is just strategic whatever, because we don't know, then it makes sense. And to test the market, how some people would say, testing liquidity. And what makes me a bit nervous, or what fucks me a bit up, to be honest, and what really sucks, is that Bitcoin getting utilized as something like this in this early stage. If you do this at 1 million BTC price, 500K, or these big gold valuations, the big boys can play around and nobody would care. But if you do it yet, you basically have swings from 30%, 20% in this asset class. And I think that's harmful, not a good looking. And in the end, big boys will win regardless. But I think it could be way more profitable if they do it in the 500K range or something like that. And I expect them to pump the market, even though retail is not buying BTC, they will buy BTC. So and countries and they will feel forced to buy and to be part of it. So I think it's just temporary again, even the same with the stablecoin market cap. But it's not a good looking. I mean, I experienced a lot of DMs in the last days from people who believed in BTC the last 5 years and did DCA and believed in the up-only narrative. And they texted me the first time with serious thoughts about, is it really what it is? Is it really what we thought? Maybe you are right, Captain, with your smart contract Ethereum thesis, and that it needs utility to thrive. So that's basically the sentiment, and I think this MicroStrategy shit is the reason. I'm sure it is.
I mean, I know there is many people will be concerned about the leverage that MicroStrategy strategy is taking.
Yeah, and the gaslighting sucks. You know, they are talking about there is no leverage. What the fuck? How do you want to call it? If you borrow and basically buying without your money, how do you want to call it?
It was found through a read like Michael Saylor is taking debt to buy Bitcoin. So yeah, once the price of Bitcoins go down, we know what happens in DeFi protocol when you have your collateral and then prices start to go down. You are getting close to liquidations. So it was
plain stupid. This claim. It's just gaslighting. I mean, he can't handle a $1,000 BTC price. He can't handle it. That he could handle it if there would be no leverage involved. So that's basically the argument. If someone wants to sell me there is no leverage, okay. Does he need to sell BTC if it hits 1K or 5K or 10K? Probably.
Mm-hmm. And also, well, here we see some of the news coming out. I don't know, this changed so quickly as the Bitcoin price keep going down. But they apparently, they are right now underwater because the Bitcoin price. And
doesn't matter if you don't need to sell, doesn't matter. But in this case, I think he has price alarm on.
Of course, you are not gonna sell right in the bottom. They have a technical team analyzing what is the right timing of buying. I don't think they will let them get some debt to buy it right now, but it's a situation that people are concerned, and I get it because they took money to buy Bitcoin at higher prices. And now, MicroStrategy is not in a very good situation. You remember we were talking also about this stablecoin product they released recently as well.
Yes.
They also get some problems with that. Some of these derivatives getting depeg. This is not the worst. Some of them, they went down to 0.91 or something like this.
So it's so retarded to add risk. He could be the, I don't know, investor god with BTC, the next, I don't know, legend status, and he's fucking around with some people out of DeFi and building a stablecoin, in a synthetic stablecoin. I mean, without redemption. Fuck it. Really.
It was this product was backed like 40% by highly liquid treasuries and stuff like that, and then 60% by MicroStrategy itself, let's say. So even if they have this reserve of 40%, like a buffer, if the price of Bitcoin goes down, we are still safe. But
I'm tired of this shit, man. I'm tired of this shit. Yeah, let's hope the price goes up again. Then it's completely baked, man.
Yes, sad news. Everybody knows what happened here. A situation is still not recovered. We are monitoring the situation. Everything is fine, but yeah, we will keep watching. I don't know, tension is still on there. Market is
DMs
totally,
are open for someone in the viewers or after who watch the recording. If someone is out there explaining us the AP FXUSD mechanics, and if there's big leverage involved, I saw many claims on X. I don't want to repeat them because I did no research myself. But if there's some expert out there who wants to protect it, you are welcome. Reach out to my DMs and we find a date to talk about it in our next show or the show after.
yeah, great. So let's jump into the next one because we have another scandal, another thing that happens is about ZCash dumping very hard yesterday. And what happened is that it was a bug discovered with AI Opus 4.8 or something. One bug was there in the code for 4 years. Nobody discovered it, and the AI was able to find it.
The
And
$30
what happens?
subscription.
Yeah. And what happens is because the technology on ZCash, they don't know if somebody was able to exploit this bug, and they have the ability to print infinite amount of tokens.
Wait,
so there is
wait.
no
I saw
way.
a post where they claim it's only possible to mint 25 or 20% of the supply because it's in this shielded contract.
Yes.
Pool.
Okay. Yeah.
I'm not sure if that's right, but it's what I saw. But
Mhm,
even
yeah.
though, fuck me, 25%, and they could sell it for the next 20 years, you know? What the fuck?
Yeah, that's totally crazy. And then you are living with this fear that you don't know if you invest right now, you don't know if any hacker have the ability to dump the token constantly. Okay, I get that if you are the hacker, you will probably dump it instantly in the market. I don't know. Like this is usual behavior of these kind of people that break the protocols and all this. But who knows? If the possibility is there.
Let me put my tinfoil hat on. So we know there is involvement from the CIA, and I don't know who uses ZCash for real use cases. For example, paying in the internet or in black markets for forbidden stuff. Let's say it like that. I only see Monero there. I never saw ZCash there, never. And I don't know anyone who's using it because of privacy. So maybe there's something more in this about the story. And also, no, I hope I didn't. I get no cancer now or something. But you saw this weird video with this gay guy claiming about privacy and how important it is, and it was just weird to me seeing some guy with breasts or something. I don't know if it was a guy or a woman. I don't care really much, but there's so many red flags. I don't even the Solana cabal pushed it like out of nothing as a next bigger thing than Bitcoin, and also totally ignoring Monero, totally ignoring any other privacy protocol, but preaching privacy is the most important thing. So I think there's more to the story, to be honest. There's definitely more. I will never touch ZCash, never. It just feels pretty weird. It was 7 years dead, basically, and then everyone promoted it. And not everyone, 10 to 20 certain people you know from the meme coin cycle. So, do you own ZCash?
No, never interacted with it. For me, it was pretty weird, like how the behavior of the price, how what's happening, everything. Okay, I was investigating a little bit about the technology, this shielded and unshielded, how it works. how this can get integrated with other protocols like near intents, stuff like that. So I was following a little bit the technology, but I was never holder or participating on this crazy CCAS pump that happens. It was a bit weird to me, like, okay, so all these people right now, they care about privacy that I never see before. It was
Yes.
some privacy narrative going on, but yeah, it was a big surprise to me to see CCAS behaving like this. Like, I don't know, many people posting about it, and where was these people before? I don't know.
Yeah, it was really weird. Really, I mean, I think everyone here would agrees on it. I still look at CT. Everyone is cheering about the downfall of ZCash because they know specific people chilled it on a weird way. But yeah, I think for me, the technical part, ZK knowledge, is still too experimental. And if you are not able to check in any form, I mean, that's a problem here. You want privacy, nobody can check anything. But if you are not able to check anything, you never know if there's some hack going on, or it was a hack, or a supply chain hack, or inflation hack, you know, and that makes it hard for me to believe in a ZK future, even though Vitalik is a fan of it. But maybe he has an idea to make it. Maybe you need checkpoints or something like every block or every TX, or block, not TX. Maybe TXs, I don't know. The smarter brains in our space builders need to find out. But maybe you need checkpoints that you can make sure, okay, you just need to reverse the chain to this certain checkpoint. And if something weird happened, and you can maybe track, you can't track anything. That's a problem. So it's my bear case, or why I'm not that bullish. How do you make sure you get adoption when even using this protocol is a question itself? You know, it's a bit hard to understand for me that this is secure if you can't prove it.
Yes, you cannot even verify if that bug was activated or. Yeah, pretty much. There is privacy solutions out there that you can remain private, but not fully anonymous. So there is some layers, if you are talking about privacy, that you can be also comply with legislations and all that. And yeah, pretty much it was one of the news from yesterday. ZCash getting very bad.
Yeah, it's wild. It's wild. I mean, 50% or something. Dump.
It's not the only incident that happens. We have several protocols involved in security incidents. A bug related to notice pay happens also. It was some of the safe smart contract wallets generated through the credit cards was affected. And yeah, I don't know. Seems like everything is fixed now. I have some funds into it. I was able to recover some of the funds in the credit cards. I don't know. I will follow what's going on. But they say at least that if there is affected users, they will be reimbursed. But again, security concerns. And Notice Pay is a big team. They develop safe multi-sigs and all this, so it's the safe team. They are pretty much very knowledgeable team about security. So yeah, I see it's not only new DeFi teams that they are getting hacked. There is also OGs getting in troubles right now with this safety.
I think it's a wake-up call. I think it's just a wake-up call, and I'm pretty happy that this is happened in this infrastructure and not the safe vault infrastructure with multi-signatures. So yeah, I think it's a wake-up call, and don't get me wrong, Knossos Pay, you are legends and chats and based as fuck. But maybe sometimes, in training, if you are in a gym or something, or you do fighting, getting the nervous system started with a little slap in the face or in the back, sometimes it helps to be focused, 100% laser focused again, and you have responsibility. And yeah, we're building our infrastructures on your rails pretty much. So I think it's good to see it. I hope it was not that big. I hope it was not a big loss for many people, but it sounds like it's not that big of an issue, and they will fix it fast. So I think they're making money, so probably they have the money as well.
Yeah, they didn't get hit very bad here, but just to highlight the incidents, another of the incidents of this week was related with FUD, is the borrow lending mechanism protocol. They lost some money, not a lot. It was some only money that they were putting as rewards on the platform Merkel, but yeah, they were also exploited. Some money left the contracts and gone. What is a bit sad here, it looks like FUD was trying to hide it a little bit. It was no communication about they compromise or lose the funds in a timer manner. Like this happens, we see here on 27th, and then most of the news came later on 31. So they already knew about it, but they didn't communicate it properly. And later, after somebody else exposed that in public, they make a statement like this, but in my opinion, it's not good enough. Okay, it was not. It was only rewards to boost some of the strategies, but anyways, you should communicate it. Something like this happened to you or your contract.
Yeah, currently you should not fuck around with this stuff, and transparency is king currently. Tell your people what's going on. If something happens, explain it. Do everything to make sure this happens not again, and move on.
Yes. So we finished with the food section of this week, and let's jump into the next section. That is one with Charmander. So let's get into it.
Come on, Charmander. Welcome to the group. Welcome to the group.
Okay, let's get into the Charmander technical analysis. Let's get into it.
Hi guys, happy Friday. Quick market update today. The theme this week is major support lost and searching for the next floor. Starting with Ethereum, the weekly structure continues to deteriorate. After failing to reclaim key moving averages, Ethereum remains a clear downtrend and continues moving towards the next major support region, around $1,600. For now, there is little evidence of meaningful higher timeframe reversal. The broader market remains defensive. On the Frax side, the market has continued following the downside roadmap we've been tracking over the past several weeks. After losing the 38 cents higher timeframe support, price reached 34 cents downside target, as we discussed in both Market Pulse and ONCHAIN CA H show. The key development of the week is that 34 cents has now failed to hold. That support zone initially attracted some buyers, but reaction proved insufficient to shift the market structure. As a result, Frax has entered a new phase of downside price discovery. Current structure. Support levels are 31 cents and 28 cents. Resistance levels are 34 cents and 38 cents. The major area to watch is the psychological level of 30 cents. If buyers are able to defend that region, the market may begin stabilizing and forming a new base. However, if 30 cents fails, the next meaningful support sits near 28 cents. So structurally, this remains a support-searching environment rather than a recovery environment. For now, patience remains important. The market has not yet shown evidence of completed bottoming process. We'll keep updating as the structure evolves. Thank you for watching.
Yeah, thank you, Charmander.
Happy.
Thank you, Charmander.
Great analysis. Nothing to add from my side because he's really detailed and knows what he's doing. Yeah, the last words were, there is no clear bottom forming. I think we need to wait, and patience is needed. So yeah, let's watch the markets, and hopefully we see some bottom forming. If we see a bottom forming, I think we are not in the worst scenario here. I mean, we are at 1,550 currently with Ethereum. With ETH, I think it's a number I didn't expect much, really much, to be honest. But yeah, it is what it is. Let's watch the markets. Buy spot, no leverage. Cockroach mode on. Just survive, and there will come better, way better times. So yeah, let's move on.
For my side, just only mention that we are under this 1,600 level that Charmander is mentioning here. Just breaking it, but yeah, cockroaching it. Be careful, guys, out there.
Yeah, there are maybe liquidity holes or something, but I think the bottom is not. I think we don't find the bottom in the chart. I think it's someone who steps in. You don't see it before, so let's see. But that's my opinion.
Yeah. Thank you, Charmander, for your video. Let's jump into the next section. This week we are introducing also this section where we will look into DeFi opportunities. Basically, we are showing here today different farming opportunities with stablecoins. Many of them are in Fraxtal or using frxUSD. So far, what we are showing here, many of these opportunities, you will find them in a stake DAO. As you know, there are several projects like Convex stake DAO that they are building on top of Curve. So if you deposit your LPs of the liquidity pools inside a stake DAO or Convex, you get a boost in the CRV emission, so you can get better APRs in your farmings. In this case, we can watch here different opportunities of farming with stablecoins. In Ethereum mainly, this is the blockchain with most of the liquidity. TVLs are pretty high, so don't worry, you are not going to dump the APRs because you're 10K or 5K backs. And yeah, these are different. Right now, it's quite difficult to get very high yields farming stablecoins, but you can see here some opportunities around 6%. You have a couple of options there. And then around 10%, there is an opportunity here, FRXUSD with MSUSD. And also there is a created option using Morpho, about 7%, 7.37 opportunity. Let's get into more opportunities. Bueno Pues is a good chat from the Frax community, also in the Trinity. She brings some of these posts about different farming opportunities that we will be showing in this section. In this case, again, is in a stake DAO where you can stake the LPs, and there are some of these opportunities that are quite juicy. This is a bit old, so you need to check if this APR still remain the same. But yeah, over 10%, there is some opportunities there for sure. You need to investigate about the different stablecoins you are getting for farming, because there is always possibilities of the pegs or anything. So always do your own research into them. But as you can see, frxUSD is one of the main peg keepers that is getting used on Curve.
Yeah, don't worry, you're only getting one-sided wrecked. If you use frxUSD and something else, you'd only get one-sided. frxUSD never gets wrecked.
You need to save a lot of the due diligence or research, because in frxUSD you are safe. So yeah, but it's a hard time for the farmers as well. It's not easy to find very good opportunities, especially when you are conservative and you are with the stable coins. You need to consider also the risk about the different stable coins you are farming. And finally, we are gonna watch Aave before. This is the interface, and recently it was more deposits open right now for frxUSD, 30 millions, almost fully complete. When you deposit frxUSD here, you are getting 6.2%. These are incentivized with rewards from Frax. And yes, sorry, let me show you the general deposit interface. You see there is other options here that are not complete 100%. But the good thing I want to show you here is, okay, you are getting paid this 6.2% by depositing frxUSD. And then if you want to borrow, you need to pay an interest of 0.62%. So in this case, it's very lucrative to deposit frxUSD and borrow frxUSD in the other side, because the frxUSD you are borrowing, you can also deposit and get a better interest. Yeah, of course, you need to make sure you are depositing once they open the caps. It's not easy because it goes so fast, but there is a very interesting opportunity if you manage to deposit in Aave before. And nothing else from this week in yield farming opportunities and for this section. So yeah, let's jump into the next section. That is, we are going to talk specifically about the news that happens inside Frax. Also related with Aave before, what we were talking is the caps were filled very quickly, and it's already filled. So you need to pay attention all the posts from Frax. Once they open the caps, you can be depositing frxUSD, but be quick because it's not very easy. And you can also use Aave before to borrow very cheap prices. So that's a very interesting opportunity if you have the chance. you can try. More Frax news is about the protocol we already mentioned during this week. The Trinity is very good project developed also on Fraxtal, and they are reopening now on Ethereum. And they had an episode of bad debt, but they fully recovered to the users. So very nice from this team of the Trinity. And right now there is these opportunities on DeFi going on in their own protocol. So have a look into them if you don't know about them. They are building very cool stuff with the stable coins, borrowing that you get paid to borrow, cool stuff like this.
Agree.
More news
British
about
team.
it. Yes, kudos to them. Very nice people, and Corey and David and some of these guys. Then another new, there is a proposal that passed from the Frax governance is about shutting down some of the blockchains that are not getting used a lot. Aptos, Verachain, Mode, Movement, and Scroll. They are getting deprecated. So they are taking out these blockchains from the layer 0 connection, let's say. So we avoid any, I don't know, security issues or whatever, because the activity on these blockchains was not big enough to maintain them. So yeah, also one of the news coming from this side. And more things. Yesterday it was the stablecoin summit. Sam Kashimian, the founder of Frax, was there talking in a panel. So we have a video here. It's not very long, 2 minutes. So let's have a look into it and see how Sam is going to explain the difference between the different kind of stablecoin. So let's listen to it.
Thanks. Okay, let's move to the question where in your design the yield actually is coming from and who bears the risk.
Yeah, I can start. Actually, Ben said something really interesting, the last question, which is like they lend stable coins, right? There's basically two types of stable coins. One is stable coins that are not lent and they're not backed by initial debt, right? They're only backed by government treasury debt, right? Which is the asset you're pegging to the dollar, right? And those are the things that are accepted widely as payments. If you actually go read the Genius Act, the name for the stablecoin that is Genius compliant is called a payment stablecoin. It's meant to actually be accepted in wide economic activity, in banking, in commerce, and everything as a unit for a dollar. And that's a very different function than a thing that looks like a dollar that pays you yield. Right? Like you're not going to have banks, merchants, Visa, cards, networks accept things that look like a dollar, but they're actually yield products. Those are two very different, very large, big markets individually, but they're very different, even though they're called a dollar, right? And so stable coins like Agora's AUSD or like frxUSD, where the goal is to maximize the amount of places that accept it as payments as a digital dollar. The only way you can give yield is up to a treasury yield, right? The risk-free rate that complies with the Genius Act. Now, eventually, once a bunch of places accept the stablecoin, some people would want to borrow it. You can create debt denominated in it. Platforms like Cap Money can actually start using it to issue their own kind of notes, right? There's like something called Cap USD, which is a token that pays yield, right? Which is not a payment stablecoin, right? But it's a yield stablecoin that is a dollar denominated asset. So these are two very different things, right? And so for these things, there's essentially a fork in the road. You either go in the maximized payment acceptance strategy, or you go in the maximized good risk adjusted yield strategy. You can't do both by definition.
Right.
So yeah, very nice differentiation from the two kind of stable coins that I think is totally right. you cannot optimize for both factors. Very nice, well said. And I don't know if you want to comment into it. I totally recommend you, if you go to Stable Summits, you can watch the whole panel. And I don't know, Captain, if you want to mention something about it.
No, when Sam speaks, I'm listening.
Yes, when Sam speaks, we listen and learn. That's how it works. Let's go to the last news. Also, we have Boardwalk is live in Fraxtal, the blockchain of Frax. Boardwalk is a launchpad, so they build the infrastructure for building communities and launching your own tokens. Have a look into it because they have interesting mechanics and bid on the launching of the tokens. In the case of Fraxtal, it will be frxUSD involved on the launching of the tokens. You need to deposit frxUSD to participate on the launches happening on Fraxtal. And yeah, pretty cool. More projects that can get involved into launching in Fraxtal blockchain through this system.
Yeah, it's nice. We will do a little explainer the next week, probably next week. So I'm not sure when we do it, but from Frax's account there will be a little introduction how this platform works. They have cool features. It's not a copycat from these launchpads you are used to or you know from other chains. They have a built-in fee protection mechanism. It's pretty cool to explore this. Yeah, so expect some threads and some articles from Fraxforce about Boardwalk and the role on Fraxtal.
Also, I believe we will make some videos about explaining more about Boardwalk. So if you are interested, for sure, keep an eye on Fraxforce X account because we will bring some content about it. More news about Frax. Alto has selected frxUSD as a default stablecoin for liquidity. Very interesting, showing again that frxUSD is very safe. So it's quite listed in their permission PSN to mint their own stablecoin. And a part of that, they build their own protocol on liquidity with Frax in a pool. So yeah, that's nice. Pretty much a nice partnership there with more projects. In this case, Alto, choosing frxUSD as their choose pair in liquidity on chain. And finally, there is another new. We are always following the frxUSD Packkeeper pool. There is more and more coming out, but also the volume is getting interesting. So in June, we are in track to breaking records of volume through the Packkeeper pools. So we can be following this volume if we reach previous levels of maximums in the volume. So I don't know, we're still too early in June, but probably we can break it. Let's see. We will watch it through these on-chain episodes if we are able to do it. And I think that's all the Frax news for today. If you are here, we are ready for the alpha, so get ready for the best section of the ONCHAIN CA H episode. The alpha for this week is here with us today. Here I'm showing some part of the Fraxnet. If you didn't try Fraxnet, go into net.frax.com. This is the neobank product and hub for cross-chain mint and redeem of Frax. And here you can watch Frax Smart Wallet. And we still didn't have any announcement about how it works. but we can see here some of the information already. Is experience that looks like it's going to be very easy for everybody, even if they are not crypto users. They can open the wallet just like as sign in with Google or an email. Everybody have this. You don't need to handle the seed phrase or anything like that. There is gasless features, so you don't need to care if you are paying the gas with ETH or Frax or any other tokens. You are in control, so you can make. There is one EIP 7702 that you can revoke if there is any time your address anytime, and your address can never change. It's a wallet that it's there for all the EVM, and then we have not experienced it so far, I believe. But yeah, I think the most important thing about the Frax Smart Wallet is that it's going to be very easy to use. Even people that don't know how to use crypto and everything will be able to use it to transact, to send money through it. And yes, this is the purpose of it, is to onboard as many users as possible. And yeah, let's keep watching what's going on with this Frax Smart Wallet. There is more stuff coming in the future for Frax, so pretty excited to test this smart wallet function, and probably we can make some videos about it as well.
Yeah, 100%.
So I think that was everything for this week episode. We still couldn't make it very short. We are 1 hour and a half, but I hope with these sections everything was more dynamic. If you reach until here, and you get some of the alpha, as you know, and very thank you everybody for being there. If you are not in our Discord, please, you can go into the X account of FraxForce and you will find our Discord link there and join us. And that's pretty much everything for this week. I just leave you the mic, Captain, to say bye-bye to the people.
Yeah, thanks for everyone. Always here every week. So we stick to the market. We stick to building. So expect us next week again, and over a long period of time. So yeah, sleep well later. Enjoy your day.
Have a nice weekend and be careful out there. Cockroach it.
Yeah, cockroaching. Yeah. Bye bye.
Okay, bye bye.